All right, so I'm on one screen again for today. I think I should be able to successfully do this afternoon meeting by utilizing the VTF app in conjunction with my one screen. So, what's up, Eddie? All right, I was just about to say, can anybody hear me? Sounds like I'm good on the VTF. I should be good on YouTube. Someone can post the YouTube link. It's appreciated. Also, I'm definitely not going to be able to have up YouTube at the same time as I'm doing this, just because, again, one screen. So if any questions come into the YouTube, someone's able to copy and paste them into the VTF floor so I can see that on my phone, I would appreciate it. Thanks, Dave. All right, so let's get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got out of pins, I think, was on there that I took off. And I got into TQQQ, which is by far the most successful thing I did today. TQQQ short. And I'm keeping some of it. Let's go to charts. Okay. I think I'm going off the top of my head here. I don't want to bring up my level 2 and accidentally show positions and get in trouble with compliance. I think the SPYs closed about flat, maybe like positive 0.07%, something like that. The IWM I think closed negative, maybe around 0.25%, 0.3%. If anybody wants to confirm if I'm off on these numbers or whatever, just let me know. And Qs I think were up about 0.5%. So it was more of a rest day today. But it was a rest day, once again, where the NASDAQ outperformed the Russell. So, SPYs, this is a chart I have up right here. We did close above 420, kind of a rest day in the SPYs, where we closed positive, we gapped up, we closed above the open, but still technically positive on the day. Then we closed above SPY 420, which is great. And we don't have that much extension here in the SPYs. SPYs, as of the close here, are extended by $3.50 or so, if I'm reading that right, from the EDMA on the daily chart. So certainly not super extended at this point, not even really in that no-go zone. I think that's where we opened this morning. The SPYs open an area where it's very difficult to buy, it's very difficult to short. Like that $6 or so worth of extension is usually what we see, that we don't have as strong of an advantage. The shorting, the market could certainly get much more extended in your face and really hurt you. And if you're buying, the market's a little bit too extended to buy, so if we have a big pullback, you can get hurt. But here, as of the close, we've kind of corrected through time and price a little bit during the day, and our SPYs being $3 or so extended at this point is really not that big of a deal. So we're potentially setting up for some continuation there. The Qs were ridiculously extended at one point this morning. Like $13, $14 extended. At this point, as of the close, it's slightly more than $10 extended away from the ADMA, which is still in that zone where we generally would rather short. There's just too much extension here. You can start looking for your shorts. That was the game plan this morning. I started shorting TQQQ very early this morning, pre-market. I added when the market opened into that initial uptick, and this, really was my best trade today. And The concerning point is still this weakness in the IWM. The bullish case today would have been, honestly, the Qs doing this, maybe selling off it even a little bit further, closing flat on the day, closing slightly positive on the day. It sounds like Pat and I were both looking for a similar pullback to like 346 that we did not get today. Maybe there is some follow-through. But if you're really bullish on this market, what you wanted to see was time price correction, ideally more time correction on these Qs, which really is kind of what we got today, in conjunction with relative strength on the IWM. And we didn't get that. We got, once again, weakness kind of in the broader market, small caps, mid caps, XLE, financials were generally not great today. And the Qs holding up. So, again, that more ideal situation would have been an IWM close at like 178 today, with the Qs closing where they were, or maybe even a little bit lower. That would have been, I think, more ideal if you're bullish. We didn't get that. So we still have breadth problems, even if the market is proving to me that the thesis that I actually had for the last couple months here is wrong. I've been saying for a couple of months that the SPYs will not really be able to break out, and even the Qs at a certain point will struggle to give continuation if the IWM does not participate. And that NVIDIA earnings report, and I recognized it right away. I think that first morning meeting after NVIDIA, I said in that morning meeting, I was like, the market might be telling me I'm wrong. It might be telling me that the market thinks this evolution or revolution or whatever you want to call it of artificial intelligence is enough where these select issuances that are related to it, which happen to tend to have large market caps, can be so strong that they could break the S&P out and enable the Qs to have continuation without IWM performance. That's what we've been seeing so far. I still wouldn't describe it as healthy. It'd be healthy, like I was just saying. That most bullish case would have been if the IWM could have caught up a little bit, if financials, energy, KRE was strong today and the Qs rested. We did not get that. So there are still some things under the surface to be a little bit nervous about. But overall, this market looks really bullish, and the SPYs are not that extended. And the thing that I was most nervous about actually with my Q short was that lack of confirmation. I'm looking at the Qs at what, $14 of extension away from the ADMA this morning, and the SPYs not confirming that, and the IWM definitely not confirming that. But that trade still worked out. It's a big focus for me. I know some of you guys are focusing on shorting semiconductors off the open, shorting AMD off the open. If you took those trades off that extension, it worked out great. These things, you know, it's just a rule. Markets can become more extended than you expect. A market can remain irrational for longer than you can remain solvent. But it's like literally a mathematical law that eventually that ADMA has to catch up to the market via price or via time. So just this degree of extension, we just hit that point. AMD day 3 here. NVIDIA was still really strong this morning because that was the one that had new news again today with some of their new products. But coming in and looking short on some of these big tech stocks that were really extended, or for me just shorting the Qs, was great. Definitely disappointed that we, you know, as a bull, because I am still primarily bullish, even though I hedged myself out pretty well with the TQQQ this morning. I wanted to see some mean reversion, and I didn't get it. XLF looks boring and choppy, and there's nothing to talk about there. XLE was very weak today, but it did hold that $77 support area that we discussed in the meeting. And the KRE, once again, tailed below, but closed above $40. It's the third day in a row that happened. So KRE is doing a good job of holding in, but it's also not giving any real continuation to speak of. So it's kind of where we're at. You know, for me today, I had a relatively simple game plan of continuing to piece out on longs on the way up. Amazon, Apple, I took some stock off in these names today as they were, you know, once again putting in a positive day on the way up and kind of building into the Qs via the TQQQ this morning. By far the best thing I did. Whoa, that's all my executions. I didn't think that chart was going to show that. But anyway, heavily shorting TQQQ pre-market and off the open this morning, and then as you can see, trading it very actively all day today. So I did pretty well with that one. And as far as some individual stocks, you had ChargePoint that we talked. So some growth names are really good. ChargePoint we discussed as a potential breakaway gap because of an upgrade with short squeeze potential. I think I talked about long versus like 880 off the open as the daily chart level. And I missed this one. I took my eye off the ball on this initial down tick. If I saw this thing tick below 9, I probably would have bought a little bit versus that 880. I typed it up the second the market opened, and I really didn't want to pay up to 920 and take on 40 cents risk in a $9 stock versus that 880. And it was extended and hadn't given me any sort of inflection point yet to feel confident going long off of. So I ended up kind of just missing the trade because, like I said, took my eye off the ball. I was trading too many names and didn't get the pullback, didn't get the pivot low, didn't get stock versus that. But anybody who caught it worked out pretty well. Another one that we had discussed, which eventually failed but gave a great initial move, was a Coinbase Squeeze above 60, I think. We talked about how you could be long pre-market, we talked about it was pre-market was trading below 60 when we did our meeting, and at that time we talked about how you could be long versus 59 or long through 60. It eventually opened above 60. It's probably a tricky trade, tricky execution, to be honest. We've discussed this in the past as well. This is one of those trades where you're only coming in as basically like a pure momentum trade. And I don't like doing those trades that much anymore. But if you did it, it would have given you a phenomenal opening drive risk reward. You buy stock at the open at $60.07 if you get the opening price. Quickly down ticks to 60. If your stop's in at $59.99, your stop never triggers and it rips for $3+. For me, it's a very difficult trade, and I'm probably not going to be involved in that, even if I was watching it off the open, which I wasn't, but it was one of the names on our list today, and it worked out pretty well. We discussed Carvana for continuation on this daily chart, in case growth names want to be strong. And it was interesting, because if you look at Carvana, I know we looked at Shopify, Roblox, a few of these growth names, where the charts look really good, but I was just concerned that the NASDAQ was too extended. Some of those names ended up being tricky, but some of them still worked out pretty well, and Carvana worked out pretty well. So we talked about the CVNA daily chart long versus 12 for that kind of clear, obvious breakout. So if you paid up and gave it down to 12, great. You may have gotten stopped out here if you raised your stop to the opening low. I know I would have, and then obviously it ends up closing all the way up at $14. Or if you didn't get stock at all because it just opened up too high above 12, and it's beyond the risk tolerance that you would want to take in a stock of, you know, this price, I understand that as well. But if you were able to execute it, if you did give it some room, it gave pretty decent upside. And then there's one other on the list this morning for me. I only had 4 names on the list, and I don't remember what it was, to be honest. So I can't type it up. I just remember the 3 C's. Let me see if I can see the alert section on the phone. Oh, look at that. Oh, plug. That was the other one. And I was in plug, so you'd think I should know that. Thanks, Keen. Yeah, plug was solid. We talked about... So I was basically looking at this pattern. It's like descending flag type pattern here, though I wouldn't technically consider that to be a bull flag. I don't know what you would want to call this, a descending wedge after a bullish breakout Maribozu candlestick. I don't really technically consider it to be a bull flag because it's not in an uptrend. But I like that it held $8 last couple of trading sessions, and I thought that with charge point going, this could actually act maybe a little bit as a secondary play to that and break above this kind of descending trend line that you could draw from this flag. So maybe along, I think I said through like 840, 850, something like that for continuation. So if anybody caught that, it worked out pretty well also. And that's pretty much all I've got from my list this morning. My list, again, was pretty small. I was very focused on the market. I love that just as we're getting out of earnings season, the market itself has been more in play, and it's giving us a lot of market correlated names and the market itself that we can focus on for our trading, because there was a period of time here for this couple of weeks or couple of months even where if you were trying to trade the indices or anything correlated to the indices, it was very hard because everything was so range bound. But during that period of time, we had earnings seasons. We had good names to focus on every day. We had a really high win rate over the course of the last 2 months actually on our names from our morning meeting, which is fantastic when you look at what the market did and how a lot of people I think were struggling over the course of the last couple of months. And now when we come into today where we didn't have as many names in play to focus on, the entire market was in play. So you could have traded that charge point or that Carvana or that plug, or you could have been focused on the Qs to the short side, maybe some of the indices to the short side, and AMD to the short side for mean reversion, just because that relative strength has put them in play. And that's it, really. That's really all I got. So happy to take a look at anything that you guys have. Happy to take a look at any questions that you guys have. And then I'm catching a train back to New York City. Haven't been there in a while. Hopefully my apartment hasn't blown up. Charles mentioning Delta. I'm not sure if you're saying that in response to the question I had earlier or if you just want to take a look at it. But either way, I'll take a look at it. Delta 36, I think, got mentioned by someone in the morning meeting who brought up the airlines. And some of them look pretty good. And this would have worked off 36. The low of the day is the opening low, but after a half hour, it just kind of dies, right? So if you close it off 36 off the open, it's an okay trade. Gives you a move almost to $37, so an okay risk reward if you had decent execution. There's no way you should lose money in it today, for sure, but then it eventually just kind of gets boring and dies out, which the intraday price action in the market itself was kind of boring, right? SPY's real tight going sideways, Q's real tight going sideways, kind of digesting, and the IWM actually maybe a little bit more exciting. Opened weak and rolled up a little bit into the close. Judy mentioning AVGO. Whew, you gotta be careful. You gotta be careful with expensive stocks in general. I always find with the really wide spreads on these day threes, super extended on the daily chart. But if you're trying to short it, it could rip another $20 in your face before it pulls back. If you're trying to go long, the stock could go down to $775 and still be healthy. So that's why everything I do, I like to base off the daily chart. If something is too extended on the daily chart, I tend to shy away from it. I tend to shy away from day threes. Judy, I know that you're a little bit more of a momentum trader than me, and that works out for you, which is great. So sometimes you get a little bit more involved in those day threes, looking for that continued momentum that I do, and that's fine. You know, you don't have to have the exact same style as me to make money, and we can all still help each other to improve, even with slightly different trading styles. I would just say that even if it is your style to trade those day twos, to trade those day threes, to look for that momentum, if that can pay you money, you still want to recognize the degree of extension that the daily chart is telling you, because if you see that, then you say, oh wow, I really got to make sure if I'm going long something on a day two or a day three as a momentum trade, that I've got a stop in for risk management, because it could pull back to $775 or $780 and still be healthy. It could even pull back to $740 and make a pivot and be good. Though I would argue that that would be a little bit too deep of a pullback. That can happen. So I think that it's actually especially important for momentum style traders to have stop losses in. Because if you're taking those momentum trades, you're betting on continued momentum to come into the market. You're betting on high for higher, and eventually that momentum will have to fade at some point to some degree. And if you happen to be entering a momentum trade at the wrong time, right as it's fading, you really got to make sure that you've got your stop loss in place, or the risk reward won't work for you in the long run. Because you might be able to get 10, 20 real good momentum scalps in a row, but you've got one name where it's just a little bit too extended when you get involved right as it's dying out, and you could lose the profit of 10 or 20 smaller momentum winners all in one shot. And in order to be consistently profitable, you can't allow that to happen. You got to have those 10, 20 winners, and then when the losers are there, you got to recognize and get out of the way real quick, because they pull back. It's part of it. Cool, no problem. What else? What else, everybody? CRM earnings? I don't know which day that is. I've done it too, Nick. Yeah, I've done it too. Risk management. Risk management can also come through sizing. If you're very, very small, you can recognize, hey, I'm buying something that's extended and I can give it a lot of room. But I think for traders that are more momentum scalp traders, they rely on having size. So if you've got size, then you have to keep it tight, and then the momentum can pay you. What else? What else, gang? Anybody else have any questions? Or can someone check if there's any questions on the YouTube, and if so, copy and paste them over. I don't mind doing a shorter meeting today because I do got to get back to New York City, catch a train, but also not in a complete rush, and happy to answer any questions that anybody has. Hopefully I'm back to normal and back in business after this big trip by tomorrow. I'm going to go into the office tomorrow for the day, as much as I despise offices. Nothing? Going once. Going twice. There we go. Price target on plug. So for me, I've been in plug ever since the 22nd. I've been managing that trade. And really all I was initially looking for was a move to above 9. So that's really been my price target. For like a new trade, I like the $10 area as a little bit of a bigger picture price target. That would be your next resistance level on the break of that 9. On the $9, then you've got that gap fill. But then after that, you're looking at a move to 10, and you're starting to break this downtrend line too. Especially with the way some of these stocks are short squeezing, it might make sense if you have stock to have a target for 10, but be willing to keep some for a move to 12 or 13 in the lower probability situation that it happens. So AI earnings is tomorrow after the close? Is that when it is? I saw you guys talking about it a little bit, but I'm not sure exactly when the report is. Tomorrow after the close? After market close, thanks. I mean, this thing's just getting a little silly here as far as upside extension. I was looking at it. I mean, shame on me for not trailing some of my stock. I had stock pre-market on the 15th at $20, and I've been out of it, and I've been looking for a deeper correction to get back in, and I haven't. But like usual, I would just look at what the options are implying for the move on AI and take it from there. It's ridiculously extended. When these things get a lot of hype, I won't be surprised if they hype this thing up to $100 in a short period of time on a pure squeeze. I've seen way crazier things. It would not surprise me. I also would not be surprised to see it back at $28 after the earnings report, because the earnings report just brings the company back down to earth, even if it's a decent report. You know, I think I was in that day because it pre-released, right? That's why I got in. I think it pre-released. So some of the information should even be baked in. And we've seen this thing move on earnings reports in the past, but not like what it's doing right now. So I don't know. I want to see what the options are implying. It's not unfathomable to me to see this thing at $100, to be totally honest with you. Just on real news squeeze, you know, some of that bubble type stuff that we saw back in early 2021. And it also would not surprise me at all on even a decent report, just not spectacular, to see this thing back at $28, because that's where it probably air quote belongs to begin with, and that's into the technical equilibrium zone, and you're basically just erasing, you know, 2 days of price action. So we'll see. It'll be an interesting one, and we'll try to get Pat to give us some feedback on what it's pricing in tomorrow as we go into the close. I have no interest in trading it at these levels. It's not where my edge is. I'm not really a pure momentum trader like that. I find that I lose at least as much as I make when I start trading these crazy extended squeezy type of names after they're already extended. So based on my personal statistics and an understanding of my edge, it's something that I avoid. But again, my way is not necessarily the way, and every trader needs to figure out exactly what their way is for them. And even, you know, we were taking a look at Judy before, and her style of trading is an example of being a style that works for her, but is a little bit different than me. Yet we can all get, you know, feedback from each other that makes all of us better. So that's what we're trying to do here. Everyone should communicate on their different trading styles, and it'll make everybody better. All right. Well, on that note, I don't mind wrapping it up a little bit early because, like I said, I got to get back to the city. But I also don't want people to be afraid of communicating their questions. You know, the virtual trading floor and this afternoon meeting goes a long way to making all of us better. And if you're not going to put yourself out there for questions, then we can't help you to improve. And if you ask questions, it helps the team as well. So no one should be bashful on that. But again, I don't mind the little bit of a break today because I'm tired and I got to get back to the city. Oh, Zach sneaking in a question. Do you ever draw lines or more use support and resistance levels? I don't really draw lines. I'll pay attention to them, and I will occasionally. I'm not a big believer in, I call it the connect the dot game. You know, you guys remember being a little kid and having the coloring book, and you connect the dots and it draws a picture? Well, if you can do that, then you can draw You can connect the dots on charts, and you could be a hypothetical millionaire if trading was as easy as that. For me, and I do pay attention to those trend lines though, because other people do, and that can create some degree of a self-fulfilling prophecy on them. But I'm really a stickler for my definitions. I don't want to see a trend line. I want to understand where the pattern of lower highs and lower lows actually breaks, where that definition of trend actually changes, or the definition itself fails. To me personally, that matters more than a stock getting above or below a trend line that you draw for yourself. Thanks for the question, Zach. All right, gang. I'm going to wrap it up. Have a great night, everybody, and I will see you all tomorrow.